The numbers can't be bad. And that's what he said. He said the economy is great. We are booming, right? And so these numbers must be bad because we have a great economy. Well, how does he know we have a great economy? Because he says so? I mean, maybe Trump just believes that he's so good at whatever he does that the fact that he is president means we can't but have a great economy because he's the greatest president ever. And so we must have the greatest economy ever. I mean, that's what he believes. In fact, and I'm going to get into tariffs later, but, he's talking about how, we're getting rich on tariffs. I mean, does he really believe that the road to riches lies in taxation, that the more taxes we have, the richer we're going to be? It's actually the opposite. We're not tariffing ourselves into wealth. We're tariffing ourselves into poverty because tariffs reduce free trade. And the freer we are, the more prosperous we are. So we don't increase prosperity by increasing taxes, right? We do it by decreasing the size of government so that we can reduce taxes. But again, I'm gonna get into that. Let me stick on the jobs again before I jump ahead of myself. This person, right? Now, of course, who is Trump going to replace her with, right? Nobody is going to trust whoever Trump appoints, because if you get fired for reporting bad news, well, you're going to be reluctant to report bad news, right? I mean, the reason that a lot of people don't want to be the messenger of bad news is because they don't want to get shot, right? So if you have a track record and you're the next messenger, what kind of news are you going to bring? Well, you're going to have to bring good news, right? But the markets now are going to start to pay attention to this, and they are going to realize that they're being spoon-fed propaganda when it comes to the government, rather than legitimate economic statistics. And all of this, I think, is going to undermine our financial markets, undermine the dollar. In fact, the dollar got clobbered on Friday. Now, it gained a lot on Wednesday, but it lost a lot of it back. The euro was up 1.5% on Friday. It closed just below 116. It was down about 114 on Wednesday. The biggest mover was in the Japanese yen, where the dollar sank 2.25% against the yen. That is a big move against the yen in one day. And stock markets were down. Dow down about 550 points. Bigger move in the NASDAQ, which had just made a new high on, I think, Thursday. It was at record territory. Russell 2000 also down a little over 2%. That index, of course, never made a new high. Just the S&P and the NASDAQ, led by the big stocks like NVIDIA, big record highs this week in Meta, in Microsoft. So those were the big names that were driving the averages to new highs. But beneath the surface, the troops were not following the generals. And, now that the tariffs are kicking in this week, the reciprocal tariffs, the deadline was supposed to be August 1st, which would have been Friday, to the 7th, I think, on Thursday. So Thursday is the new drop deadline for a lot of these new tariffs to come in. And again, I don't think, Trump is going to chicken out. I think that, a lot of these tariffs, they're not quite as high as what was originally reported on Liberation Day. And I think the markets are going to get hit. I mean, I think the reaction following Liberation Day was right. I think the bounce that followed was a dead cat bounce, a sucker rally, maybe some short covering, a lot of, meme stocks and crypto. And by the way, Bitcoin was down about 3% on Friday, while gold was up, 2.25%. That Bitcoin is digital gold is wrong. If it was digital gold, it should trade like gold. I mean, even if it's not like gold in the real sense, that it's a metal, it should at least mimic it in some kind of financial sense, but it is negatively correlated. It goes with the NASDAQ. So it's a digital NASDAQ stock with no revenue, no earnings, no dividends, no assets. I mean, no nothing, right? So it's got nothing to do with gold. So in other words, it doesn't have any value whatsoever, but it was down. And I think all these markets are going to sell off as the reality of these tariffs set in. They are going to mean higher prices, and they are going to mean a weaker economy, and they are going to mean job losses. And we have all sorts of other problems that are going to be weighing on the economy. But anyway, let me get to the Fed, because we had a Fed meeting on Wednesday, remained unchanged. And nobody thought that Powell was going to give in to the pressure to cut rates. But there were two dissenters that were more recent, I guess, Trump appointees. I guess both of these individuals maybe have their eye on the prize of being Fed chair. But there were two dissenters. And I actually agreed. Later on, we found out why they dissented. And they dissented in part because they didn't think the labor market was as strong as everybody else thought. And they're right about that, right? And in fact, if you listen to what Powell said during the press conference and in his prepared remarks, how strong the economy is, how strong the labor market is, how we're near full employment. No, we're not. We're only at full employment if you're going to rely on a bullshit number like 4.2 and close your eyes to the more realistic 8% that you got with U6. So we're nowhere near full employment. We have a weak labor market. So why isn't the Fed hiking rates? Well, Powell told you. It's because inflation is too high. In fact, the most recent CPI that we got showed year over year inflation, or CPI, right? Not really inflation, but what they look at. Their target is 2%. We're at 2.7. We're way above target. So why should they be cutting rates? In fact, Powell actually let the cat out of the bag in response to a question. Somebody said, well, are you going to look through the inflation, right? Because it's temporary or transitory. People are reluctant to say transitory because the Fed got into a lot of trouble with that word before. But he was asked, will you look through the numbers and assume that it's just a one-off event? And Powell said, well, we already are looking through the numbers because we're not hiking rates. If they didn't believe that the uptick in inflation that they're seeing now was going to stick. And the Fed is wrong. In other words, the Fed thinks that what we're seeing now is transitory without wanting to say transitory because we're at 2.7%. We're not at 2. Remember, if the Fed was being honest, which is a big if, about 2% is the goal, right? In 2000, that was 2013. In 2014, it was 1.6. So we were below 2, but by less than we're above it now. So we were not below 2 by a lot. But because of that, the Fed was so, desperate to get inflation to 2%. It saw it as such a big problem that we were a half a percentage point below target. And they launched QE3 in 2013. The justification was, hey, we're at 1.5% and we need to be 2. And so we really want to make sure that inflation goes up to 2. And so we're doing QE, right? Now, we are above 2 right now by more than we were below it. And so if being below 2 by 0.5%, why don't we need extreme tightening now? I mean, Powell even says that we're moderately restrictive. And I don't agree. I think we're stimulative. I think that rates are still too low. They're lower than the real rate of inflation. And you can look at the credit growth. Credit continues to grow in this country. And so that credit expansion is the inflation. And money supply is growing. Just look at it, right? So the Fed is not being tight. The Fed is still being easy. We're above target by more now than we used to be below it. Now, there was a question that Powell got, and I think he lied. And a reporter said, do you worry about the interest burden that the federal government faces on the national debt? Because when you have interest rates up here at 4.5% versus a lower number, that the government has to pay higher interest on all the treasuries that it rolls over and all the money it borrows. How can they not think about that? How can they not consider that? That's like the elephant in the room. I mean, that is a very important element of all of this because it actually also determines the size of the debt. Because the more the government has to pay in interest, the higher the budget deficits, because the extra interest payments are themselves borrowed and are added to the deficits. I mean, right now, interest on the national debt is like, 1.3 trillion a year. And as interest rates stay high and more of the low-yielding debt matures and is rolled over, those deficits get higher and higher. How can the Fed not consider the size of budget deficits in its monetary policy, in its economic analysis? I mean, doesn't the Fed try to figure out in a year or 2 or 3, what is the labor market going to be like? Does the Fed think that fiscal policy and the size of government debt has nothing to do with that? Does it not think that maybe massive government borrowing might crowd out private sector borrowing? And maybe these exploding deficits means that the private economy is going to be weaker, that capital is going to be sucked out of the productive economy to feed the unproductive growing government? Does the Fed not factor any of this into its analysis? I mean, if it doesn't look at that, what the hell does it look at? So I think he's just lying. But where he did tell the truth in a way, inflation being above target and the Fed being worried, and the Fed, he pinned it specifically on tariffs. And again, tariffs are not the reason that we're going to have high inflation, right? They're going to be an excuse that we're going to blame it on tariffs. But tariffs are just going to add to the problem that consumers are going to be dealing with when it comes to higher prices, because the inflation is still there. And the Fed is helping to create it by not hiking rates. Powell should be increasing interest rates, but he's afraid to do it because he understands the impact that that's going to have on the economy, on the bubble, on government finances. So the Fed is refraining from hiking rates. They're just not cutting rates because I think, and I've said this before, I think Powell is afraid to let the cat out of the bag by cutting rates and having long-term rates go up, because that's going to be the end of it, right? If the Fed cuts rates and treasuries go down and yields go up, which I think they're going to do, that is a huge risk that I think the Fed would rather not take. Maintain the illusion that if they cut, long-term rates will go down. It's better than actually cutting and shattering that myth, because long-term rates would go up, because that would create an even bigger problem. But Powell said that the Fed is going to make sure we get on prices from the tariffs, that does not turn into a longer-term inflation problem, and that the Fed will do whatever it can to prevent that from happening. which to me means hikes. Rates got to go up because we're going to see big increases in prices because of these tariffs. Right? I mean, there's no way around it. I mean, yes, they're looking at some of these CPI numbers and they're saying, you see, they're still low. Well, they're not that low and they're not that accurate. But a lot of the price increases haven't been passed through yet. The importers have paid these tariffs, just like they do with all sorts of costs. I mean, the idea that foreigners are going to pay the tariffs is nonsense. I mean, Trump still is operating under that delusion. That's why he says we're getting rich off of tariffs, because he thinks that the foreigners are paying our tariffs. Meanwhile, so the tariff rates that were supposed to kick in on Thursday, Canada's going up to 35%. So that's a pretty big number for Canada. The other 90 deals or 80 deals never panned out, right? So Trump is just imposing these tariffs. But India is 25%. That's a pretty big number. Taiwan, Vietnam, Indonesia, Philippines, they're 19 or 20%. Switzerland, 39%. Switzerland. Now, I think this is a good example to use as to why the exporters aren't going to pay our tariffs. So, and I think it's going to go up. If I wanted to sell it now, I think the used Rolex market is going to pick up in the United States because now there's going to be a 39% tariff on Rolexes and every other watch, luxury watch that's made in Switzerland. Now, to hear Trump talk and just cut prices and sell its watches to Americans for about 40% less than it sells them all over the world. There's no way that that's going to happen. Switzerland is not going to do that. Switzerland is just going to keep its prices the same. And if you want to buy a new Rolex in America, well, you're just going to have to pay the tariff. And a lot of people will pay the tariff because, Rolexes aren't cheap watches. So if you're buying Rolex watches new, right, you are not, pinching pennies, right? You got to have some money to buy a new Rolex at a higher price. Now, there are going to be some people that won't buy another Rolex with a 40% tariff. They may wait, you know what? I'll just buy one when the tariffs go away because, they're not going to be there forever. So I'm not going to be the idiot and pay a 40% tariff on a Rolex, and then have the tariff go away and then the price drops. So I think more Americans will buy used Rolexes. But that's going to hurt, the jewelry stores that predominantly sell the new ones, right? If you buy a used one, a lot of times you're just buying it, online from a private seller. You're not going into, a jewelry store. They're stocking all the brand new ones. So, their sales might go down. Oh, when you happen to be in Canada, you happen to be in Mexico, buy yourself a Rolex. Right now, I know if you're going to be upfront about it, you got to declare it when you bring it in, and then you got to pay the tariff, right? That's because Americans pay the tariff. So legally, if you are on vacation out of the United States and you buy a Rolex without a 39% tariff, when you bring it back into the United States, you're supposed to pay the tariff. Now, most people are probably not going to do it, right? Especially if they wear the Rolex. I mean, maybe when they go on vacation, they can not even take a watch. So that's what's going to happen. People are going to buy the watches when they're on vacation. They're going to buy a used watch, and a few people might buy the watch and pay the tariffs. But obviously, right, most people would say, well, who cares what the rich do with Rolex? It's just a good point to show that the tariffs are not paid by the exporters, right? If tariffs were paid by exporters, every country would just have tariffs. The fact of the matter is, tariffs are pretty low around the world. If they were such a big moneymaker, right? If you just could get rich, that we're so important to the world that the world will lose money to sell us stuff. That's how important we are. That the world would rather sell products to America at a loss than stop selling, which is complete nonsense. Now, I know a lot of people say, well, they'll just build factories here. No, they won't. Yes, there are a lot of these countries, the EU, Japan, right? They made some promises about investments in the US. Most of these investments are never going to take place because they're not legally enforceable. They're just goals, right? So these guys can say whatever they want just so Trump can brag about it.